Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in. Good afternoon. Joe Caccera with Real Estate Radio Live. Thank you very much for those that are tuning in, listening to us, following us on Facebook. We appreciate that very much. Again, just a reminder, we try to stay consistent with these shows for the benefit of those that follow us on Facebook. It's growing quite a bit. We love the interaction, the people that get involved, the comments back and forth. A lot of times, obviously, we can't respond to some of the comments during the show, but we'll certainly do that afterwards. But appreciate that very much. So thank you for those that are taking the time to tune in on Facebook and watch us live. Again, we will try to keep our schedule Tuesdays, Wednesdays, and Thursdays right about 3 o'clock Pacific Standard Time. We'll continue to do that. However, as I always mention, I would love to have you download the podcast. That is really what happens here. We do this live show. This becomes the podcast, which gets distributed all over the place. We have thousands and thousands of downloads each month. So thank you for those that continue to download the show and listen to it on a regular basis. I appreciate that very much and want to continue to mention that because I don't want that to go unnoticed. I really do appreciate all of you that have been loyal. There's been a lot of people that are loyal to the show. I get emails from, I get phone calls from, people that come in, stop in from time to time, even and chat with me, which is really nice, that follow the show. So thank you. I appreciate that very much. But download the podcast if you would. That way you can listen to the show at your convenience anytime that you'd like. You could go to iTunes and just type in Real Estate Radio Live, Stitcher, Google+, all these different places you go to. You could also go to our website, RERL-1558.com. That is RERL-1558.com. Today I'm going to talk about, the title is The Real Estate World is Changing, for sure. That's not the title. I'll tell you the exact title. I added that to it. Basically, the world of real estate is changing, and you've heard me say this a lot. However, we still need good people, and that's going to be my topic today is, yes, it's changing. Absolutely. We would all agree. You know me, if you've been listening to this show, I'm a big advocate of change. Change is coming, and it's coming big time. I'm talking a lot about, you've heard me talk a lot about what's happening in the world, the startups, the competition, the price compression, go on and on. However, we are still always going to require good quality people, and I'm going to talk a little bit about that. The reason I put quality in there is because that is the difference. I do see a big difference. That is why I put the word quality. So the title today, The World of Real Estate is Changing, but we still will need quality people going forward. I'm going to talk about that today. So let me get started on this. What do I mean? I'm going to give you a little backdrop and just a little bit of history for those that may not have been listening to the show for the last couple of years. You know that I'm a big advocate of technology, advancement, change. I've seen it coming. I'm talking about it. We're involved with different companies. We're involved with that evolutional change that's taking place in the real estate and lending industry. And it is. It's changing. And that's a vague word, though, when we say change. So let me break that down a little bit. Now, most people are probably not aware of this. I am, because I study it every day. I'm in tune to it every day. This is what I do for a business, a living, investment. So I study this every single day, so I know what's going on in the industry, what the competition's doing, what startups are doing, how much money they're raising, what models they're after. So I have a pretty good knowledge of all this. So recently, over the last couple of years, you're hearing companies like Open Door, iOffer, iPad, some of these others, their concept is, we're going to buy the house outright. So they went out and raised a lot of money, some of these startups, and they're buying the home outright. Okay, so what their premise is they tell you and they explain to you, they try to illustrate and diagram why you don't need a realtor, a lender, or title company or anything like that, because they're just going to make you an offer on your house, plain and simple. You're going to negotiate. You may say, for instance, I think my house is worth $300,000. They're going to get a valuation or appraisal on it, and then they may offer you $285,000, $290,000. They may even offer you $300,000. I don't know. This is the example of the model. So there's no real estate agent, no loan, no lender, no title. So they cover all this, right? Now, it sounds kind of cool. and it may be cool for some people, but let me just give you some groundwork to be laid here about this model and this program. The reason I'm going to talk about this program today is because this program is advocating not using people or less people in real estate transactions and lending transactions, and it's taking place. Open Door, as an example, is a company that's raised over $500 million and even more in their series. I think they've raised several series of rounds, and I think they may have raised close to $1 billion now. The reason I bring it up is just today the announcement came out. Both Open Door and Compass both raised approximately another $400 million to expand on their products. Open Door is going to be starting a mortgage division and title and escrow as well. So this model, again, is that they advocate buying the entire home. Okay, that so far has had some success in markets where the home prices are less. The markets aren't quite as crazy as Silicon Valley and other places. It's still my opinion that that's going to be a tough model. The way it is now, it's going to be almost an impossible model to have success with in a market where you have expensive homes, $1 million, $1.5 million, in a market that's popular in demand, even though the market slowed a little bit here and there's a little more inventory on the market. Most people, to give you an example, if someone called you today and your home was worth $1.5 million and you knew that, and you know that, and someone called you and said, listen, I got this great program for you. We're not going to charge you real estate fees. We're not going to do this. And by the way, we'll offer you 1.45. So we'll offer you about $50,000 less or maybe a little less than the market. Well, most people aren't going to do that because they want to test the market. Unless they're desperate, unless they want that offer, that's fine. Here is the little hidden secret that I want to make sure that people know that may not understand the way this works with these companies. When you lift up the hood and what I call window dressing, when you're not careful, when you don't look behind a curtain and understand what's going on, these companies charge you fees. It's just that they don't call them real estate fees and they don't call them lending fees. They call them something different than you and I are listening to because it's a marketing ploy. So be careful, first of all, when you hear about these magical companies that are going to be doing things without people. This is just an example. I'm not saying it's a bad model. It's obviously working, not on a large scale, but it's working. And I think in lower end markets, and keep in mind, they won't tell you this, but a lot of these companies' volumes that do these buy homes when they buy outright, keep in mind, a lot of that activity is fix and flip. And if you're not familiar with fix and flip, so when one of these companies say, hey, great news, we sold 150 homes, we bought and sold 150 homes this month, right? Sounds pretty impressive. And then you really get the details and you realize, well, wait a minute, 50 of those homes were fix and flips, which means you bought them at a big discount, you turned around, fixed them up, and you sold them again. So you got these transactions, but it's not a true story. And granted, it's still a transaction, it's still a close, it's still a sell, it's still a buy, I get it. But a lot of this marketing is misleading. And I'm just giving you a little history behind this because this is a model that's become popular, and the reason why it's become popular because there's a lot of money behind it. So since then, there's been several other companies that have decided to implement this model as not 100% what they're doing, but some. So since then you have Zillow. So Zillow started the program where they're going to buy homes outright from consumers. Okay. Coldwell Banker just announced yesterday, or I think it was yesterday, they just big announcement. They're going to have a division of their company. They're going to start buying homes outright. So there's 5 or 6 major players in the real estate industry that are buying homes outright as part of a model. So what does that mean? It's just another model. It's just another change. It really is. But remember 2 things I want to cover about this, and this is really what I'm doing is kind of planting the seeds and laying the groundwork for this discussion today about why things are changing, but you still need quality, good people. So under these programs, again, be careful. They charge fees. Matter of fact, when you look at the details, they charge somewhere between 9 and 11% of the value of that house when it's all said and done. And yeah, most people are surprised by that, but it's true. So be careful with some of those, by the way. So it's interesting when someone says, hey, good news, we're going to take the people out of the equation. And what I think is funny about that is we're going to take the people out of the equation and tell you why we're going to eliminate headaches and money. And then you find out that you might be paying even more money you did on a traditional sale. Now, what I will give them credit for is they do take the people out of the equation, and they do take the headaches. There's no doubt about it, right? When someone buys a house outright from you cash, you don't have to worry about a loan. You don't have to worry about dealing with an open house, staging. I get it, that part. But is that worth taking a discount on your home? That's the question. So this is an example of the model that seems to be gaining steam in the industry. Eliminate the realtor, eliminate the lender, and we're going to buy your house, turn around, and we're going to sell it without a realtor, right? But remember, they're still making fees, so I'll have that conversation with anybody on the show or elsewhere that I'll make the argument that they're not saving much money. As a matter of fact, they might be costing the consumer more money, so what they'll tell you is, hey, listen, if it costs the same amount and it's less hassle, isn't that worth it? So here is my take on this. In general, you've heard me talk about this a lot. Yes, this industry is changing. Lending is changing. There's fintech, which means a lot of companies in the financial businesses are leaning more towards technology to reduce cost and reduce labor. In some cases, that's true, and it'll take a while for that to progress. But let's stick with real estate for a little bit for right now. Let me set the stage here. Technology is changing things. New startups are coming in. You've heard me talk about them. I've documented them very well, I think. I've talked about what's happening. In my opinion, there's price compression big time on fees and costs and pricing in real estate and lending. The reason why that's happening is because you have more startups, more competition, and when markets slow, be careful, it's going to get even more fierce, and that's happening in some markets. So these are the statistics, though. Keep in mind, and remember, these are going to change. These could change from time to time, and they always will, but these are not my statistics. These are real statistics, and if you do your own research, you'll find out, and it's a little bit across the board, but I'm going to give them to you again if you haven't heard me talk about this many times. We have a more educated, informed consumer. 96 to 97% of people start their search and their education online. Okay? Checkbox number one. Number two, when people go to buy or sell a home, almost 90% still decide to use a realtor. Almost 90%. Now, some people tell you 85, some will say 90, some will say 87. Let's just say 87. Somewhere in the high 80s, people mid to high 80s. So in other words, almost 8.5 out of 10 people, when they decide to sell or buy a home, they still want to use a realtor. Plain and simple. Now, that could change a year from now, 10 years from now. I get it. But right now, so let's not get confused with still a challenging transaction in buying and selling a home. I understand, and I'm the first one to say, you know, when markets were really super, super hot, right, when you're throwing a house on the market and it sells in a half a day for 20% over asking, believe me, most people will tell you that's easy money. But what a lot of people don't understand is when the markets average out and when the markets are tough, a lot of the real estate agents and lenders and these people, they spend a lot more time and a lot more money trying to buy and sell homes and do loans. They just do. Been in this business for 18 years. I know it for a fact. Here's my point. The majority of people, consumers, will still tell you that they want to use a person to help them buy or sell a house. That will change a little bit, but let me explain something. Most people are busy enough with their own career, their own business, and they're not an expert, and they're wise enough to know, you know what, I want to hire an expert because I have my own money to make. I use this example all the time. If you're self-employed or you're employed, and let's say just for whatever sake you make $100 an hour, $50 an hour, $200 an hour, whatever you make, do the math. Every time you step away from your job and your income earning potential and you start spending more time on something that doesn't earn you income, you're losing money. My example is this. If you say, hey, listen, I could do my own open houses, I could do my own marketing, I'll stage my own home, I'll do this, this, and this, and you decide to spend 15 to 20 hours doing that, and you make $100 an hour, do the math. You have to be careful when you're taking an approach where you're losing money trying to save money. So be real careful with that, number one. Now, there could be some people that are retired and they have free time and they'll say, I want to do these things. That's fine. There's a small percentage that do that. So most people want the help. Here's, in my opinion, what's changing. So let me get down, let me get real granular now on what's changing. Yes, they still want to use people. Here are the things that are changing. It's going to get more competitive, which means you better know your business. When I say quality people, I mean quality. That means it's going to get so fierce and people have so much education and information on their own. They, in some cases, the consumers are better prepared than the real estate agent or the lender in some cases. It's true. It's true. So you had better be on your game. You had better be educated, informed. You better know what's going on in the marketplace. You better know what your competitors are doing. You better understand what the next best thing is and what's marketing and who's doing what. You know what I see happen a lot? Consumers will bring stuff up that real estate agents and lenders don't even know. And guess what? Because they're online, they're doing research, they're educating themselves, and they are a more educated, informed consumer. So be careful. When I say we still need people and good people, and when the consumers, the statistics tell you people still want to hire someone, be careful with that. Don't assume they're going to hire anybody. That part is changing. I am convinced of that. I'm already seeing it. So if you're a real estate agent, lender, consumer, you're going to see this happen more and more in the next couple of years. If you're really good at what you do and you stay on top of the market and you market yourself well and you work your database and you stay in touch with people and you give them value day in and day out and not just when you're trying to make money off of them, you're going to continue to do well. I believe in that because people are still willing to hire someone to do a good job for them. They really are. So that's the first thing that's changing. The second thing that's changing, and don't be surprised and don't be misled by this either when people tell you different, the commission and fee structure is changing. It just is. It just is. It's more competitive because more people are doing it, because they have new startup models out there. Be prepared to whatever model you have in the real estate and lending industry. Make sure you adjust your cost, your liability, and your overhead, because what you make, the margins are going to shrink. They're already shrinking. And I can give you stories and data. I have some stuff right here I pulled off today. Right here, the article in Housing Wire, the margin compression everyone has experienced is our own fault. This is an article just posted today, and it's about the mortgage industry. It's our own fault. So the reason I bring this stuff up is that don't be fooled. If you're in this business, you better continue to educate yourself and become a better offer to your clients. Secondly, understand that pricing is going to be under pressure and it's going to continue to be under pressure. So make sure your overhead, your model, your liabilities are conducive to that. I would keep a real close eye on that. And thirdly, you better educate yourself on technology, because you're not going to be able to buy or sell a home online and use no people or no paper or that hasn't happened yet. But you would better be able to have an educated conversation with people about the use of technology, apps, online, pricing, all these. You had better educate yourself in how technology is being used by especially the younger generation. Because the first thing they're going to ask you is there an app for this? Can I do this online? Well, some of you could do online. Some companies are smart enough to do that. I hope I'm clearing this up and kind of taking you through this journey, because I just want to make sure people know, because I've been pounding the drum for the last couple of years and how this industry is changing and some of the stuff that we need to do. And I'm a big advocate of it. I really am, because you can't stop change. It's going to happen. It just is. So you adjust to it, you adapt, and you do the best you can, and you prepare yourself for it. However, what I'm not convinced of, and I'm 100% convinced, is that when someone says this app or this company is going to completely eliminate people, I would say that's absolutely false at this given point right now as we stand here today. That's not true. You're going to hear this. You're starting to hear it. When we come up with this app, when we do our online thing, when we buy these houses outright, we don't need people anymore. Well, here's what's funny. These companies that are raising all this money, Now, they are raising the money to buy homes, right, because they need lines of credit to do that. They need warehouse lines to buy all those homes. But they also need to hire people. And they're hiring and they're working with real estate agents and lenders. And they're going to have to start a whole new lending division now, Open Door. $400 million. We're going to start our own lending division now so we can do everything in-house. So be careful what's happening behind the curtain. Be careful with the window dressing. I say it all the time. Is the industry changing? Yes. Do you have to make adjustments? Yes. But there's some things going on where we still will always need quality people going forward. All right, I probably went a little over here. I'm sure I did, but I'm going to take a quick break right now, and I'm going to come back, continue the topic today. Real estate world's changing, but we still need quality people. This is Joe Kuchera. I'll be back with you in just a minute.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Getting ready to buy or sell a home in 30, 60, or 90 days? Check out BundleSelect.com to find out how you could save 20% or more on your entire transaction, real estate, lending, and title. With BundleSelect.com, technology and a personal concierge are at your service to save you time and money. BundleSelect's hand-picked team of experts will compete for your business so you'll save thousands of dollars by bundling real estate, lending, and title services. BundleSelect.com gives you all the control, including using your own realtor. I'm Joe Kuchera with Real Estate Radio Live, and I have been on the radio educating consumers for years. I'm here to tell you BundleSelect.com is the best way to save money on real estate. By bundling services, you could save tens of thousands of dollars. This savings model could save you money on your move, lower your interest rate, or cover your closing costs. Visit BundleSelect.com. That's BundleSelect.com.
The estimated minimum savings are based on a comparison with the national average. Individual results may vary, and the estimated savings are not guaranteed. Bundle Select Inc. is a licensed real estate broker. California Bureau of Real Estate Broker license number 004666902.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live. Thank you again for those that are following us on the live feed on Facebook. We appreciate that very much. Just a reminder, we'd love to have you download the podcast. If you haven't done that yet, go to iTunes, type in Real Estate Radio Live, or you go to our website, RERadiolive.com. That's RERadiolive.com. You can download the podcast there. The topic today, I went a little bit over, got a little worked up here on the first segment, went a little bit over. The real estate world's changing, but we still need quality people. That is the topic today. That is my belief. And I just want to make sure I clarify this because a lot of people that are following the show know that I'm a big advocate of technology, evolution, change. That's true, and that won't change. But I also am aware so much that I know some of these models and what's going on is that the fact of it is people still want to use quality professionals to help buy and sell a home and get a loan. That's going to change, of course, for sure over the next several years. But my point is, it's going to take quality people. There's going to be a big, big consolidation and washout in this industry in the next couple of years. I sense it coming. I'm not doing it as a wish or I hope. Believe me, I hate to see any companies struggle. I hate to see anybody get laid off. That's terrible for anybody. But I do think, keep your eye on this industry, the real estate and lending industry, and this is not the first time I've said this. Keep an eye on this for the next 6 to 12 months. I think as we roll into the second and third quarter of next year, if something doesn't change, if markets don't change, there could be massive consolidation. I think there'll be some bankruptcies. I think there'll be some buyouts. There'll be a lot of merger and acquisition activity. You could sense it coming if you follow the market because there are way too many companies that grew way too fast and have way too many people and a lot of resources out there when activity drops. And it may not sound like much, but across the board, ladies and gentlemen, if housing and lending activity drops even 10 or 15% over a few month period, that has a big dramatic change on companies. If you're ramped up and you have payroll, overhead, liabilities for, let's just call it doing 1,000 transactions a month, seriously, I've seen this happen before. and within 60 days, you know, you're cranking away and you're doing 900,000, 1,100, 900,000. You're pretty consistent, right? And then in 30 to 60 days, and believe me, this happens this fast. You could go from 1,000 transactions a month to 700 within 30 days. You go down to 500 in 30 or 60 days. You could go down to 400. Your business could drop that quickly in this industry. And some people might say, well, Joe, that's ridiculous. That wouldn't happen. It does. It does. And I'm not saying it happens all the time. I'm not saying it's going to happen. But let me tell you, if you have a slowdown in a market, and in this industry on interest rates, if interest rates were to go up 0.5% or get close to 5.5% or something overnight, and you know, that could happen too. If you have a general slowdown in this industry, and then on top of that, the Fed just raised rates again yesterday, and again, be careful with that thinking. Just because the Fed raises the prime lending rate doesn't always equate to that, to the 30-year mortgage rate. So be careful when people say that. I think there's still a misconception there. That's not necessarily true. They don't go hand in hand. Eventually they might, but not right away. My point is, if you get a market slowdown, on top of that, if you get a rise in interest rates, companies in this industry, their production could drop 20, 30, 40% within 30 to 60 days. You know what that does? And here's the tough part. While you're reeling, trying to recover and adjust and lay off and, you know, right size and all this, you don't know if it's going to keep going. That's the scary part. I mean, you don't know if you're doing 1,000 units a month and all of a sudden you're doing 700 and you do 600 the next month and 500. Your thought in your mind is, what if this keeps creeping lower? So I don't say these things to scare anybody or be negative as much as I do to educate and inform that these markets could change like this. And this is kind of the circling around what I wanted to do this topic on today is, no matter what changes, my point behind this too is there will always be a need for good people. Now, there'll be less people, I tell you that. Any kind of market adjustment or change, a lot of people will get out of this business, both lending and real estate. It happens all the time. And then if it starts cranking up again, then people jump back in. But there's always a percentage of people that stay focused on their business and do a really good job, and it's probably about 10 or 15% of all of us that do that in this industry. It's sad to say, but it's true. And it's just not my guess, my ideas. It's proven. I've cited those statistics before. We have roughly 10 or 15% of people that do 80 to 90% of the business in these industries. We will always need good quality people. So what I would say in the next couple of minutes I have left, if you're in this industry and if you're a real estate agent, my recommendation would be stay on top of your game. Make sure you're with a company that's going to be competitive. Make sure you're with a company that is forward-thinking, because if you're with a company that says, don't worry, nothing's going to change, we're not changing anything, I would be afraid of that. Let me tell you right now, if your strategy from your president or your senior management says, we're not changing a thing, we're staying the course, we're going to rough the storm or whatever you want to call it, I would question that. Here's what you should be hearing. We're sticking to our core values. We're going to make the best use of technology. We're going to improve our systems, our platforms, marketing. We're going to adjust our overhead, our liability. We have a plan. Those types of things, if you're working for a company, those are the kinds of things you want to hear. Because if someone's telling you we're not changing, we're staying the course, I'd be concerned. I really would if you're working for a company where someone's saying it. What you want to hear is someone that says, we understand things are changing, we watch the market carefully, we make adjustments, we're careful about our overhead, our hiring practices, we understand that, this is our plan, this is what we plan to do, we're going to deploy this technology, this marketing. You know, those are the types of things you want to hear. So be careful of that. Continue to educate yourself, inform yourself, make sure you're the best offer to the consumer. Consumers still want people, good quality people, to help them on real estate transactions and lending. They just do. So that would be the recommendation for the people in the industry. For the consumer, continue educating yourself. I think it's great. I really do. I mean, I love the fact that we have more educated, informed consumers. It makes our job easier when you think about it. You shouldn't be insecure about it. When you get a call from a client and they say they're able to talk a lot of the lingo and the type of business, that's great. Makes your job easier when they understand a lot of it, because it could be confusing for a lot of people. But just make sure you're on your game and you got it. So for the consumers, seriously, be careful about this. And this is an industry, and I hope I don't hurt anybody's feelings, but maybe. This is an industry that real estate and lending where a lot of people will feel bad because they want to use their aunt, their uncle, their brother, their mom, their dad because they're in the business. I would say be very careful about that, especially as the industries evolve and change. Don't use someone just because you always have before, or you feel sorry for them, or you want to give them business. Don't do it. And some people, if you take that the wrong way, I'm sorry, but that's the truth. And the reason I say that is that there's too much money potentially at risk to do that. This is an expensive venture. Don't put it in the hands of someone that does it part-time. Don't put it in the hands of someone that says, well, you know, I sell houses on weekends and I do something else Monday through Friday. I'm not saying that's wrong. I'm not saying that's bad. I'm not saying those could be qualities, believe me. But what I'm saying is, as things contract, as the markets change, as technology changes, as price compresses, all these things are taking place. Make sure you're working with the right person that's going to do the best job for you, because it could cost you money. What's that saying? Something to the effect that the wrong decision could cost you. I mean, the point is, I forget that saying, but the bottom line here is that making a decision could be a good one or a bad one. Just because you make a decision doesn't mean it was the right one, right? We've all been there before. My point is, if you're not given the correct information and the right options, and you're not consulted the right way, and you don't have all the information at your disposal before you make that decision, that could be a costly venture, if that makes sense. When you make one of these decisions on real estate or lending, you want to make sure you have all the information in front of you, you do your due diligence, you exercise your options, and you make your decision based on that information. Not flipping a coin, not saying, well, you know, this is what happened 5 years ago, so let's just do this. No, it's too costly. It just is. So make sure you make those decisions and work with the right people. And again, the best thing, you heard me say before, it's always to find people. If you don't have someone you're working with on the real estate side, lending side, certainly always feel free to contact me. I have a great group of people that we work with. But ask friends, coworkers, family members for referrals, and they usually have some good people that they could refer you as well. All right, we're going to wrap things up. Again, the topic today, the real estate world is changing, but we still need good people. I feel strongly about that, and I just kind of cited some reasons why I think we do, and that will continue to change. There won't be any robots, I don't think, taking over anytime soon, but eventually, again, technology will change the way we work for sure. All right, this is Joe Kuchera of the Real Estate Radio Live. Thanks again for tuning in, and for more information, you could always go to RERadiolive.com. Take care until next time.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.